context and wider market, and it's really relevant for us to understand what has been what has been changing.
Yeah. So with that, we'd like to start our China Insight panel, and for this, we'll have a fireside chat between Chibo Tang, managing partner at Jibo Partners and Gobi Partners, and Miles Wen, CEO and founder of Fano Labs Limited. So let's have a look at this fireside chat, and we'll have a live Q&A afterwards to see these VC and startup stories. So let's give a look at this fireside chat.
Hi everyone, my name is Chibo Tang. I'm a managing partner at Gobi Partners, and I'm here with Miles Wen, who's the CEO of Fano Labs. And we're here today to talk about, all the exciting things that he's doing on the AI and voice recognition side, and the opportunities that he sees in China and the Greater Bay Area.
Thanks, Chibo. Hey guys, I'm Miles Wen. I'm CEO and founder of Fano Labs. I'm also adjunct assistant professor at Hong Kong University, where we specialize in processing voice AI technologies. Basically, the thing we do is actually you give me an audio, we'll get machines to tell you how many speakers are there in the audio, who are they, at what time did they speak, what did they say, what do they mean by saying that. And we also synthesize human voices based on texts. And we turn our technology into applications and ship to governments, different kind of enterprises. And recently, we're more focusing on the banking sector, where we're working with 10 of the top banks in Hong Kong these days.
It's a very interesting sector. I mean, AI, voice recognition, and I guess you guys are now counted as RegTech.
Yes. In the RegTech space, in the banking sector, nowadays we're primarily working, shipping AI solutions for our banks to help them improve their regulatory compliance, procedures. Mm-hmm. For instance, one of our customers is the largest Chinese bank here in Hong Kong. So when they sell a product like a corporate bond, there are 37 steps a relationship manager has to follow. They have to go through the entire 37 steps before the transaction can be done. If it miss anything and the customer lose money, they can file a complaint directly to the bank or to the regulator, and there's an investigation. So last year alone, there are over 3 billion Hong Kong dollars in regulatory fines in banking sector in Hong Kong alone. So the way that they solve this problem right now is every time there's a sales activity, they put someone behind the scene to listen to it. They will sample checks on.
And those are human beings listening.
That's a human being, real human.
Yeah.
They listen to 35% of what's going on in the calls, and there's something bad, they call up the relationship manager, redo the transaction, cancel the transaction. So what we do with them is actually we automate the entire process by putting our AI technology in there. So here are the things you have already gone through. Here are the things that we thought the machine thinks you probably haven't missed.
Got it.
Yeah.
I know that we have a lot of people in the audience from the utility side. And obviously utilities, there's a lot of customer service calls and things like that.
Yep.
I mean, do you envision that this type of technology would be helpful for them?
Yes, there are 4 major utility entities in Hong Kong. Like actually, we're working with more than half of this utility companies at this moment. For them, the regulatory requirements are much less stringent because even if you have a bad service, you will not cause customers lose money. Yeah. So they will knock on the door and give you a big fine, for $1 billion fine just because of something bad. But there's actually lots of leak opportunities. For instance, we're working with one of the utility companies that are doing, one type of energy. So they're mostly selling stoves. So they basically say they're very concerned about, when the customer calls about, I need someone to fix my stove. They call you, they ask about it, they check everything, they don't come back. Because when you lose that, it's not just about losing a customer, losing the sales of one particular stove. They replace that stove with the electricity powered stove. Then you also lose your gas consumption bills. Same thing for electricity. So we're working with several of them trying to identify what's going on with this kind of repair calls, why people call you and did never place an order.
Well, that's super interesting because I think most people have associated AI and kind of this voice recognition software as, it can help cut down on human labor, right? And so that's cost efficiencies. It can, help cut down on number of fines that you're fined by the government or regulatory bodies, and that's cost efficiencies. But actually, what you're talking about is a new use case where it could actually be revenue generating.
That's right.
And that's a completely new way of thinking about it from an organizational perspective. I do want to ask one question because I think this is the one thing that has really set you apart from all the other voice recognition startups out there, and the key reason why we actually invested. So how, can you tell us how you guys think about mixed languages?
Yeah, we're actually being extremely focused on solving the problem of mixing two or three languages together, or starting out with one language and switch to a different language, as the conversation goes on. That creates lots of problem for the voice technology. If the people in the conversation are switching languages, and there's no one in the room will press a button and say, hey, there's a language change. Like in Siri, for instance, if you press select a language, that's the Chinese.
Yeah.
If you try to say English the way, it doesn't work.
Right.
Give you nothing.
Right.
If you select English,
and that's the problem with even like Google and like all the top kind of services.
So everybody, even for Google, Siri, everybody they have to select a language before you can use direct voice recognition. But we develop technologies where say, do not tell us. You just say whatever you want. We'll recognize it for you. If you change the language, we'll change it for you. I think we're probably the only company in the world that actually can handle this kind of a code switching, mixed coding problems.
Yeah. No, that's amazing. And, I'm a firm believer that will ultimately drive you into unicorn status. So, keep up the good work. You guys started here in Hong Kong, but you guys also have a very big office in Shenzhen now, and have, we're one on the forefront of that trend of, integration into the Greater Bay Area.
So in Hong Kong, we have lots of scientists due to our strong academic backgrounds, and we have so many top-notch research universities. But when it comes to deploying applications, you need lots of engineers to help you do it. And then we run short of manpower. So that's where we start leveraging, the resources in the Greater Bay Area in Shenzhen. Where there's a bigger pool, much bigger pool of engineers, where we just say, come and help us build it up. Because no matter how good a technology it is, if you cannot form an application, a system for it that delivers some values, it's useless. So we need a combination of research, the scientist part, and as well as engineering part. So that's where we see there's a good synergy between the two places. And that's also why we have presence in both places.
Yeah. No, that's a common recurring theme that we've seen across our portfolio. All the portfolio company in the deep tech or like in the technology space. I mean, they have their high tech personnel here in Hong Kong. Graduates of the best universities in Asia are actually here in Hong Kong. And then they build out their tech development team and the rest of the ops team in the mainland where numbers are more abundant. Yeah, with that, we'll wrap it up. And thank you so much.
Thank you.
All right. Well, thank you very much for that, Miles and Thibaut. And we now have the opportunity, all of you listening in, to pitch in some questions for a live Q&A session that we have. And I think we can start with our own questions. And I have one for Thibaut, which is I'm really curious to know about the landscape, the Chinese investment landscape, and how it was impacted and how it changed with COVID.
Yeah, hi, this is Chibo.
Hey.
Thanks for your question. The question was how the investment landscape has changed with COVID, right?
Exactly. Yeah.
So, I think COVID has obviously had like a big impact on a number of sectors. E-commerce, healthcare, these come to mind. These are opportunities that a lot of investors have been chasing, since those have benefited actually from, the stay at home and, the lockdown policies. Obviously, things like travel tech. I mean, those took a big hit, just because there's no more travel basically for the last 2 years. I think from my perspective and from Gobi's perspective, we've continued to deploy capital and actively invest across a number of areas that I think have been relatively resistant against the negative effects of the pandemic. And, some of those are in the deep tech space, AI, a lot of enterprise solutions. Those startups continue to do extremely well. Enterprise SaaS in China obviously is a big sector. Connected city, those are areas where, a lot of our strategic partners are interested in, and those remain, there remains to be a lot of innovation there. So, I would say that as on a whole, we continue to invest. It hasn't really changed our strategy that much, although we have had to, adapt a little bit in the sense of our investment processes. And, sometimes we're not able to do on-site DD. We're not able to meet entrepreneurs in person. And so we're doing a lot of meetings on Zoom. And yeah, I think that's just a mode of work that everyone's getting used to.
Yeah.
All right.
Yeah, and I think moving a bit past COVID and looking forward to some of the challenges that we have working with corporates. I would like also to introduce Miles and to ask you a question regarding the examples that you gave regarding working with banks and utilities. And could you tell us a bit on the key challenges working with corporates? What should startups be more aware, and what would be your advice here to the audience?
Thank you. Hey, I'm Miles, founder of CEO and Final Labs. In our past experiences, because Final Labs were very specific selling to large enterprises and governments, so in our past experiences, what I learned is actually if you have a very new technology, especially in our sense, we're doing like AI technology. One of the key challenges in early days is actually, for large corporates, there are lots of internal procedures. There are ways that needs to be done. There are certain procedures for pretty much everything. And oftentimes when people, and then for utility companies, for instance, or banks, for instance, they don't necessarily understand the technology extremely well. And if you're a new startup, your technology has no track record. So that's actually a risk. That's something called technology risks as viewed by many internal people in large corporates. So it's quite important that you as a startup, you do a lot of proof of concept, proof of technologies. You have to go in there and have prove it, then build a few successful cases, and then you can get in and try to think about how we can bring it into a production level. And the other part is actually because sometimes the corporates don't necessarily understand the new technology you're trying to bring to the table. Sometimes before they can trust your technology, they need to trust you. So it's quite important that you gradually you try to build up your corporate champion inside your organization or your target customer, so that they can gradually trust you a little bit more, and then they can start working with you on those POCs and POTs that I just talked about.
Okay, perfect. Yeah, it's really interesting to understand your perspective here on these two topics. One, that is the risk regarding the technology, because sometimes it's really new technology and sometimes hard to understand given the novelty. And on the other side, you really need to be trustworthy, which is an interesting perspective. And I would like to get to Chibo, because then on the VC's perspective, what attracts VCs? What advice for the startups do you think relevant when they are preparing themselves to pitch? Do you resonate on what Miles was saying about the risk on the technologies and making sure that they need to be comfortable with that and to be trustworthy? What's your perspective here? One of those. Yeah, Chibo, you need to unmute yourself.
Sorry. Yeah. No, so I think my perspective is obviously going to be quite different from either corporate investors or corporate partners looking to work with startups. Obviously my job is I'm paid to take risk, right? To make those earlier stage bets on entrepreneurs and technologies and companies before they're well established and before they get to a market dominant position. So when I'm investing or when I'm looking at startups to invest in, it's usually before they've actually proven out their full business model. It's usually before they've gotten like significant revenue. And so at the end of the day, it comes down to is this an entrepreneur that I can believe in? Is this an entrepreneur that I can back? I think it's more about that trust building that Miles mentioned before, about finding like that champion within a corporate. I mean, I think a lot of these entrepreneurs should also find champions within the investment teams of venture capital firms, right? And obviously, the higher level that champion can be, I mean, the easier it would be to push it through. But I guess like all venture capital investors would kind of like boil it down to three things, right? So if you're an entrepreneur pitching a VC, I mean, you got to be able to show them that the market and the opportunity that you're addressing is large enough. I mean, VCs are always looking for home run investments, and so your company has to be able to show that it can gain momentum, gain scale, and ultimately become a very big company for most VC investors to be interested. And then it comes down to your business model. What is unique about it? How is it differentiated from other companies in the space? And then ultimately, are you the right person to be doing it, right? And so just showing that you have a strong track record of working in the industry, that you have the right resources, that you can help get this company to be a success. Those are the main things.
And it's interesting to see because being invested by Gobi Partners is also going through a vetting process. So you increase the trust probably bigger utilities or future VCs will have on that. So it's this landscape of investment and trust and continuous vetting with the proof of concept and so on that startups resiliently have to go through. But I'd like to tack back, Thibaut, to the questions you're mentioning different areas where were affected by COVID. You guys focused on a few that were more resilient. I was waiting for you to say, oh, utility space is where it's all happening. But I'd like you to zoom in a little bit on sustainability. I know it's a big area. It's an area within, with different areas within it. But what's your view on the sustainability topic? Since we hear everybody talking about it, and you as an investor, what's your view?
Yeah, I think, I think obviously people in the audience are from all different parts of the world. I think different parts of the world are on different parts of that growth and hype curve. I think Asia is just kind of getting on board. But, a lot of the stakeholders in that space obviously are pushing it very strongly these days. And not just sustainability, but ESG as a whole. I mean, I think that those are topics that everyone is talking about. And so I think that there obviously are a lot of investment opportunities there, especially for early stage investors like us. The way that we look at the space, I mean, obviously it covers a lot of areas. And this is a conversation that I've had with Austin a couple of times. We look at it as a very holistic view. And technology, actually, not just AI, but also new materials and enterprise solutions and even like down to 5G and very deep tech sensors and chips and things like that. It actually spans a very wide range and in the entire value chain. And so there's innovation happening all along that value chain. And as an investor, I'm looking at all parts of that.
Good.
Thanks.
And moving forward from these key focus areas perspective, more towards a different topic. Yesterday, when we talked with Quince, we were talking a lot about the opportunities in the Greater Bay Area, and we understood these opportunities from a CLP perspective. And surely it's a big market to tap into. And for Miles, I would like to ask you for the GBA market, what kind of skills, talent, you say that it's really important to enter in these markets, especially for those that really want to explore GBA. What's your perspective on this?
In my experience, I think trying to get into the GBA market requires definitely, especially in the enterprise space, definitely requires you to understand the Chinese culture, and also not just the people culture, but also the corporate culture in there. Because at the end of the day, as I mentioned, if you want to try to be enterprise, especially as a startup, you have to earn trust from people. And the first step of earning trust is actually to feel that you understand them. I mean, if you give them the feeling that you understand what's going on, you're not just coming and just as not knowing what's going on and just trying to wreck things. So I think that's just my top tip for anybody trying to explore the GBA market. And the other thing is actually also pay attention to local regulatory requirements. Although GBA, we're talking about Guangdong province, Hong Kong, Macau, but the jurisdiction systems and also the legal regulatory requirements are completely different, along the two sides of the river. So you have to be very careful about that.
Yeah. So good tips. Well, we're reaching the end of our time, and I'd like to thank Thibaut and Miles a lot for the contribution, and leave you a little bit of a minute or so for final remarks. The audience, what do you think they could benefit from your perspective? Thibaut?
Yeah, maybe I'll just take the opportunity then to chime in on that last question, and obviously the importance of the GBA. I mean, I think I'm sure you guys have talked about it in the past, and everyone's just getting to know it a little bit more. I don't think it can be understated how important the development of this region, the Greater Bay Area, will be. It is the most exciting area of development in China and probably in Asia for the next 10, 20 years. And so, obviously, maybe my view is a little bit skewed, but as I sit here in Hong Kong in the middle of the GBA, but that's something that I firmly believe in. I think that it is the just to point out one example. I mean, I think that it is the one place in China where the government is trying to promote more cross-border integration, trying to test out the one country, two systems that is currently in place in Hong Kong and Macau, in places on the mainland. And as that kind of continues, as those policies extend, I think that you're going to see a very different China in this part of the GBA. So I think that is something that is super exciting. And anyone who is a China watcher or has any interest in the China market should definitely spend as much time as you can, find local partners, just figure out ways to participate, because this is the next growth story.
Yeah, boom area. I like that. Thank you. Miles?
I'll just echo what Chibo said. GBA is a great market. It's a good opportunity. Just go for it.
Motto for startups, right?
Yeah, that's it. So once again, Chibo and Miles, thank you so much for these live Q&A and for the fireside chat that we have just saw. I think the insights that you gave were really valuable to all the utilities and startups that are seeing us right now from all over the world. So thank you so much for that. And it was really nice to have you here. So thank you.
Thanks, guys.
Thank you very much.
Thank you. Thank you.
And
bye.
Bye.
Moving forward with our China Insights panel, let's go for Justin Hu from Bloomberg NIF that will tell us a bit about some insights on the Chinese market and the way that China is moving in the energy transition. So let's have a look.
Good morning, good afternoon, everyone, and welcome to the CLP Free Electrons program. And thank you for giving me the opportunity to give the opening presentation. It's really my pleasure to be here and to spend the first 10 minutes or so and give you a view of what's happening in China, which is probably one of the world's most interesting markets currently undergoing the energy transition. So let's talk about China. If we all think about the news in the last year and a half or so, no doubt in our minds we think about the pandemic, which of course is still ongoing and there's so many uncertainties around it. But actually last September, one really important news event happened in the world and perhaps marks a really important turning point in terms of the world's efforts to mitigate climate change. And that's China's announcement to peak CO2 emissions by 2030 and also achieve carbon neutrality by 2060. So up to this point, actually, most of the carbon neutrality or net zero pledges in the world have been in relatively smaller and more developed economies in Europe. But after China's pledge, of course, this changed everything. And in some ways, it's marked a turning point in terms of net zero pledges around the world. In fact, by July of this year, nearly 70% of the world's emissions are now covered by some sort of net zero pledge. And a large part of that actually has to do with China's pledge and China joining this club from September last year. However, if you think about China, though, most of you probably know that China is the largest contributor to global emissions. It overtook the United States almost 10 years ago. And as you can see, it's far more than Europe and the US, and the emissions in China are still growing. At the same time, China is also a leading supplier of clean energy equipment. So for the last 10 years or so, all the cost declines we've seen in technologies such as solar, wind, and as well as more recently batteries, a lot of that has to do with the scaling of a manufacturing capacity in China, as well as the deployment of these technologies in China. So today, anywhere between 80% or more of these clean energy equipment types are being manufactured by Chinese companies in China or owned by Chinese companies and manufactured in other parts of the world. If you take a look at the China story, though, it's been quite remarkable over the last 30 or 40 years. As you can see, actually, China's emissions have been rising steadily since 1990. It really took off after the country joined the World Trade Organization in about 2001. And then there was 1 decade of really significant growth between 2001 and 2010. Since then, although emissions are still growing, things have sort of tapered off a little bit in the last decade. However, if we think about where things are going, China's 2019 emissions are still, from fuel combustion, is still 25.7% higher than 2010. So even though the last decade was a lot slower than the previous decade, it has still been a really significant and large increase. And if you look at the 2030 goal, in other words, China wants to peak its emissions by the year 2030. But even if it achieves that, that still means that the 2030 emissions are 155% higher than they were in 2010. So given that size and scale, this is obviously a still very large increase in terms of its emissions. And as you can see from this chart as well, half of China's emissions come from electricity and heat. Another 30% or so comes from industry, and that's probably one of the actually largest portions in the world from industry. Transport is still a relatively small portion, but it's also growing. So let's take a quick look at China's energy transition in the last 10 years. Obviously, that has helped slow emissions. New electricity capacity being added in China is less carbon intensive than it was before. As you can see, more wind and solar renewable energy is being added. Also, more gas relative to coal is being added to the system, and less overall electricity generation capacity is being added. So that has already. So from this, we already see the beginnings of decarbonization in China's power sector. And indeed, in line with many other countries around the world, the power sector probably has the easiest path towards decarbonization, given the lower cost of solar and wind. In fact, we forecast that China's power sector emissions will likely peak around 2026. However, if you look at the next 30 years to 2050, it's still a significant portion of its power generation will come from coal. So although it is on the path towards net zero emissions by 2060, we're not quite there yet. And there's still going to be a significant portion of fossil fuels power coming from fossil fuels by 2050 and likely by 2060. On the transport side, China is actually a leader in terms of electric vehicle deployment. As you can see, buses, especially in buses and two-wheelers, as well as increasingly in passenger vehicles, more and more of the new sales are coming from battery electric or plug-in hybrid electric versions in China. And in fact, transport sector emissions, even though the size of the fleet is still growing, will likely peak before the end of this decade. However, despite this peaking and falling of emissions, a large portion of emissions will still be around in the year 2040. So again, we're not quite there yet in terms of on a path to net zero in the transport sector. But even though there are technologies currently cost competitive and available, at least in power and transport, to help China decarbonize, and in those two sectors, often it's a matter of speed rather than whether technologies are available. A much harder question comes from emissions from the industrial activity, which accounts for roughly 30% of China's emissions today. As you can see here, China's industrial emissions are actually more than any other country in the world, significantly more than any other country in the world. A large portion of it comes from iron and steel, as well as cement, which are highly energy intensive and actually very difficult to decarbonize with existing technologies today. The good news for now is that industry emissions in China actually peaked in 2012 and have slowly been declining over time. In fact, the energy intensity of most of the major industrial products in China are falling. So China's actually the country's able to manufacture a lot of these goods using less emissions in more energy efficient forms. But again, even though this is turning a corner, it's still not enough, because to get to net zero emissions, obviously we have to eliminate emissions from everything. It's not only enough to peak emissions or to become more efficient, even though it helps us move in that direction. So like the rest of the world, there's increasingly talk of new technologies. And actually for China to achieve net zero, like other countries in the world, it also needs a stage 2 decarbonization technology. And one of which that is most promising and being talked about a lot is hydrogen, which is a clean molecule that could be used in sectors which are difficult to decarbonize, like heavy transport industry or buildings. However, there is a question about how we manufacture the hydrogen. Hydrogen can be manufactured through clean electricity or fossil fuels with carbon capture or even nuclear power. And a lot of hydrogen will be needed as well in order to meet the demand from transport industry or buildings. Another portion of this, of course, is electrification. So as much as possible, because clean energy is competitive and more of it will be deployed, we want to electrify as much of the end-use sectors as we can. And then for the portion that we cannot electrify, we will use molecules such as hydrogen. All this means that electrification can actually help China decarbonize faster, but the power sector will increase significantly in size as a result of that. We did a little bit of modeling work just to give you a sense of the scale. In the blue here is the base case, the current trajectory in terms of the growth of the power sector in China. So China's power sector will just fall short of doubling actually between now and about 2050, grow about 1.5 times. But if we're going to take the approach of electrification, in other words, using as much electric vehicles as we can, electrifying industrial processes where this is possible, and other areas, we can see the power sector almost double in size between now and 2050. So the additional demand coming from electrification. As you can see here as well, a lot of that will come from transport, buildings, as well as industry. And of course, to generate all this new electricity, we're looking at significant investment in the next 30 years, especially if we need clean electricity, clean and renewable electricity to meet this ongoing demand. So right now, China has about just over 2,000 gigawatts of installed power generation capacity. If we want to have an accelerated transition to bring the country close to its 2060 goal, if we want to meet all that additional demand with electrification, we will need to invest almost $8 trillion by 2050 and have a power generation sector almost 5 times larger than what we see in 2019. So that's obviously a very significant change. But finally, if there's one thing that we can think about is that the last 10 years, if you think about the energy transition up to this point, a lot of that has been driven by the manufacturing powers of Chinese companies. So Chinese companies have brought down the cost of solar modules, batteries, wind turbines, other things that have enabled these technologies to become cheaper for everybody around the world. There's a question about where would China deploy its efforts and talents, or rather, where would its companies deploy its efforts next? Could it be, for instance, a second generation decarbonization technology such as hydrogen? And of course, now we see that some Chinese solar companies that have been very successful in that industry are turning their sites to manufacturing electrolyzers or other management software, fuel cells, etc., other things that will support a clean hydrogen economy. So I think it goes without saying that anything that any sort of decarbonization the world wants to achieve, we need to see China play a very important role in that. So obviously, with this, we can see that any sort of decarbonization that the world wants to achieve over the next 30 years, or any attempt to reach a net zero goal, will involve China in a very significant way. So as China in the last 10 years has scaled up a lot of the technologies that enabled our first round of energy transition to take place, the next 30 years will be really even more important. And there's a big question about where the new technologies are going to come from. And of course, China will need to play a very important role in scaling, testing, and investing in these new technologies. So thank you very much for listening. I hope this gives you a bit of an idea of where China is and some of the opportunities and challenges that lies ahead on its path to decarbonization, as well as the role that it needs to play in the world if we're going to hit our climate goals. Thank you very much.